See these comments from Evans today as well?
I did, and actually, I'm pretty surprised at those, Kelly. I mean, Charlie was really one of the original price level targeters, make up for past mistakes, don't let bygones be bygones with inflation targeting, and those were some fighting words, sort of expecting. He knows the market's expecting more, but he's not really ready to give it. And I think, look, Neil Kashkari to me really summed it up in his Friday dissent piece, which I think all of your watchers should have a read of. He said, we're basing our next move up in rates on assessments still. Assessments that inflation will get back to an average of 2%, not that there is a 2% average hit. And that assessment, as well as the assessment on the labor market, have just been kind of bad assessments by the Fed for the last few decades. They're not that good at their assessments. So, I'm very taken aback by what happened.
So let me lay this out and correct me where I'm wrong. What you would like to see is something more like them coming out and saying, we're going to let inflation average 3% for 3 years, and then we would raise interest rates, for instance, just to give people a kind of a framework for what they're dealing with. On the other hand, Evans came out today and said we could start raising rates before we start averaging 2%, which. So your point is they're kind of getting the communication is confusing here if what they're really trying to do is let things run hot, so to speak.
Well, you say that, and we thought that, and I mean, I thought Charlie was on that side. I thought a lot of these guys are on that side. We knew Rob Kaplan probably wasn't based on his comments, but just the idea that we're not going to some commitment to hit this average inflation target for a time, say 3 years of average inflation at 2%. Before we move, as opposed to an assessment that we will likely be hitting average inflation of 2% over the next 2 or 3 years.
Right, because their assessments are so wrong. Yeah.
I mean, we're going back to kind of almost the NAIRU-based world of saying, hey, we think inflation is going to pick up 2, 3, 4 quarters down the road, so we're going to tighten early. That's what we thought we got away from. And honestly, Kelly, we didn't get away from it. And I think the market's pretty disappointed in that. And it's giving the Fed a lot of leeway, but it's also pulling back where I think a lot of expectations were.